in Hindi. And the more the most important factor about this particular session is we'll be learning lot of interesting properties of VIX. So as I said to you, I have found out specific observations I did, though in fact I am going to show you for last 1 year's perspective from January to till date. In fact, I have tested for many years, then these interesting properties of the VIX has come into the picture. So VIX stands for the volatility index. So do not get confused with the real-time volatility and VIX. VIX is the volatility index of Nifty. It is not the volatility of Nifty. Many used to say that VIX is nothing but the volatility of Nifty. No. Volatility index is a separate parameter. It is a generic version of VIX. Rather, I can say it is more accurate version of VIX because a version of the volatility. So it is not the volatility of Nifty. So many used to get confused with that. It is a volatility of Nifty. It is not like that. Volatility of Nifty is entirely different. VIX is entirely different. And VIX is calculated from option data. Whatever the options are trading, weekly, monthly, all series options. So now whatever the active contracts of the options are, even long-term contracts, all those options, those who are having specific liquidity, all those data is being pulled and through an interpolation method, it is being calculated. And it is a very complex method. So we'll not go into the calculation procedure of the VIX. But it gives you lots of information about the market trends. So certain part of those things we will see today, and many other things you can able to explore of your own. Once I give you that guideline, once you start exploring more, you will get lot many idea from this VIX. So often it is a beautiful indicator which we are ignoring so far, and I was feeling sorry that I have been ignoring these times. So in fact, recently after compiling a lot of data and after introspecting a lot of things, I just come out of all these conclusions. So as I said to you, on VIX, we have started in this lockdown period itself, a lot of things have started. But much before that, my research process was on in that. So there, 3 months before, I have released one video. All of you also have witnessed that event. So this is also a live event we have conducted. So VIX, how we can identify the top and bottom using the VIX. This is a live event we have conducted 3 months before during lockdown. So there too also I appeal all of you to contribute to the PM care. Then after a couple of follow-ups also I have given how those levels has worked. 3 weeks before also I have just released one video on how this bottom formations of 10,553 which has achieved, then after where the price is going to move. Based on that also I have just released one video, and my recent video also Nifty top and bottom from here onwards where we should go. These levels also we have estimated. So there also I showed you that whatever the VIX high has made, the highest VIX on the closing basis whatever is being made, those levels of 11,256 level has almost achieved. So beyond that where we should move. So this part, these two videos also I have released. But today the specialty of this particular session is entirely different. How you can identify a rally or a correction. So often we used to say specific profit booking or small falls as a correction. or a small rise as a rally. It is not qualifying to be a rally or a correction. So when I say about a rally or a correction, the same trend, the uptrend should continue for a prolonged period of time. So to be specific, whenever to qualify it as a rally, the price action, upward price action should continue above 5 days. Then only you can say that it is a rally. So above 5 days, whenever any price of move continues, that is considered as a rally, same as a correction mathematically. So in between, there will be a consolidation on the third and fifth day. Fifth and third day may be a consolidation. When I say about consolidation, so there are some many major supports or major resistance cannot be broken. So this kind of actions are known as your rally or correction in the smallest cycle. Smallest cycle. So this is what we say about a rally or a correction. So now coming to the part of our, this is only one of the this program 3 months back during the lockdown's first phase we have calculated. This is the thing. So Nifty from a bottom. So from top we have calculated 12,430. So there also I told you whenever the VIX crosses 50, you should start calculating. So you have found out a bottom 7462. Our calculation 7511 it has achieved. Then after the reversal zones we have calculated all these reversal zones perfectly in different time sequence it has happened. And in fact, here too also I have released one video between this 10,533 and 11,257. What are the levels you can expect? Here too also in this video I told you whenever there is a crossover happens beyond 10,377 or 452, it can take you to the 11,258 level. So this is what levels we have calculated. So now coming to, so these price actions has accepted by the market honorably and it has worked nicely. All of you have experienced that. So now I'm just going to compile all those informations and I am going to give you specific new things. So as I said to you, VIX stands for the volatility index and it is being calculated from the option data through a complex numeric procedure. So that also you can able to calculate, but you have to compile a lot of data for that. And this VIX, what does it gives? It gives an early indicator of the trend change. It's a early indications of the trend change that we can get it from the VIX. So what are the common use? So far, what are the things we have concluded through our smart finance research? First, identifying a bottom of the associated index when it is crossing above 50%. So when this VIX crosses 50% above, you can utilize that VIX and from the predefined high, what will be the high for that year? From there, if you start scaling down, you can able to identify the bottom. So you have to take the help of Fibonacci ratio for that. You can also take the Elliott wave structures for that also. There is no restrictions that only Fibonacci can be utilized. Number two, top also you can able to associate in the same procedure whenever it fall below 20%. So whenever the VIX fall below 20%, that time it is essential to know where the top is going to be restricted. So this also you can able to calculate. So these two use that. Then the third use what you are going to learn today, identifying the continuity of the rally or correction based on its median value on different time period. So on its different time periods median value, you can able to identify whether that rally is going to continue or the correction is going to continue or it is going to cease or fizzle out after some days of time. So this also one of the best use of the, I'm just using the three terms median, geometric mean, and harmonic mean. So these three mathematical terms are very, very essential to identify the rally is going to continue or the rally is going to fail. So these particular things you are going to, these informations you are going to get from this VIX. So how to calculate these things? I'm just focusing on these particular parameters. You will get the formula. So here the Excel formulas for that. Median, direct formula is there. And here geometric mean. So this also direct formula is there. Harmonic mean, also direct formula is there. So you must be thinking that what is this geometric mean and harmonic mean? If you are a student of statistics, then there is a point to understand this thing. Why not the simple arithmetic mean? Why this geometric mean and harmonic mean? So if you keep your interest on the subject of statistics, I'll say that post this event, you have a web search to know what is the difference between a arithmetic mean, geometric mean, harmonic mean. So you will come to know about those terminologies clearly. But if you are a trader wants to use this concept, experience this concept, I will say that these three formulas you require. So just concentrate on these three formulas. One is median, geometric mean, and harmonic mean. And here we are not taking any single data. We are taking a discrete data model. So whatever the opening VIX is there, what is the highest VIX is there, what is the low VIX is there, and what is the closing VIX is there. All four data points I am going to take for calculating this median, geometric mean, and harmonic mean. So till this point, I think all of you are clear. So three parameters we are calculating. One is median, second is geometric mean, third is harmonic mean, and it is not on a single data point. It is taking the open, high, low, and closing values of the VIX. So till this point, our mathematics is over. Now our judgment process starts. So this particular method says, as long as this VIX, you will find out that median will be slightly lesser sometimes than the geometric mean. Sometimes you will find out the harmonic mean also lesser or greater than this thing. So there is no need of arranging these things into the higher order or lower order now. Just imagine that these three values we will get, and as long as first we will be talking in terms of the median, then I will talk in terms of what is the geometric mean and harmonic mean is used for. So as long as the VIX is below this median value, once again I repeat, as long as this VIX is below this median value, your rally is going to continue. The moment the VIX on closing basis crosses this median value, your rally is going to be fizzled out or rally is going to change and you will be entering to a corrective phase. And as long as it maintains above the median value, you will see that correction will continue. Correction will continue. So we will be seeing certain and different time periods you can take. You can take for monthly period, you can take for the entire period of 1 year, you can take for the entire same calendar years period, different time frames you can take. You can even take weekly period also. Nothing wrong in taking the weekly period. So I am just taking the period of January 1st January to 31st January. I have just calculated the median. I have calculated the geometric mean and I have calculated the harmonic mean. So here I am saying that on the month of February, if the VIX is maintaining above 14.61, then I am set into a corrective phase. Market is going to correct. Market is going to go for a
correction as long as the VIX is maintained above 14.61. The moment the VIX will fall below 14.61, that time my corrective phase is going to end. So I have just conducted till 31st January when the VIX on closing basis what is a 17.4. So we are into the corrective phase as per the 31st January. So very next day you can say that month of February, as long as it is there above 14.61, you are correcting. The moment it is moving above, you have started a rally. You have started a rally, or you have started a uptrend, or that uptrend has continued. See, till 20th February, you did not have a much bigger threat here. On 24th, though there is a 280 point of correction happened, but that sets the median value. You have crossed the median value 14.61 and we have gone to the 17 level. So that again sets your corrective phase, and though there is a 200 points of fall you are expecting here, but post that there is a huge fall you have expected. There is a huge fall and that same trend of your falling trend continues. Same as for the median of the February. Once you are taking for the February month's median of the February, if you take 1st February to 28th February, and same time you are taking the geometric mean and harmonic mean for this thing. So geometric and harmonic we will discuss. So as long as it maintains above that, in the month of March, you have never seen that it has fallen below 14.27. Rather, it has gone up and it has created different highs. Month of March, same median value again we are taking for the month of March. You can find it out. So here is the median value is 60.50. 1st April alone, only in the 1st April itself, though there is a fall. So 31st March to 1st April, there is a fall, but your closing VIX has fallen below your median value, and subsequent day also it has fallen for below your median value. The price is falling. So 8,597, 31st March closing, fallen down to 8,200. There is a 300 point fall. Here too also near to 200 point fall. But this median value maintained. That's why what happens on the 3rd day onwards, you have found out that there is a growth happened here. So this median value, as long as it maintains above your median value, the VIX maintains above your median value, the correction is going to continue. As long as the VIX maintains below your median value, the rally is going to continue. It's an excellent question. They have asked that. Hiteshji asked why we are using this discrete data model. Discrete data model is used because it is a volatility. It is more than a price. It is an early indicator. It is derived from multiple data points. So discrete data gives a more accurate result as per the static data. So for that only I have used it. Part of this learning, the bigger part of this learning is you can find it out that there is a in January, it was a clear-cut trend that 31st January we are finding out it is the above the median value. So we are clear that it is going to fall as long as it is 14.61. So here 4th February itself there is a 200 point of rise, but we have found out that it has fallen below 14.4. We entered a buy trade, so we got success. But the larger part of this study will come into the picture in the month of April. January, it was a clear-cut signal. You entered and happily you have come out. But when it comes to the month of April, this study becomes more complex. Median value is 60.50. You have come to 60.1 on 1st April. There is a fall, 300 point fall, but your VIX is below your median value. Those who bought here, trusting on this concept, one day very next day they are getting that desired result has not come, further fall has happened, but again this median value is honored, respected or accepted. The VIX has maintained at a 55.3, which is way below your 40.50. So this particular thing, once you are observing, you cannot say that there is a correction. The correction is going to end. It's an early indicator. It is an early sign that it is going to end. So if you are a trader, if you have bought into Nifty by looking into this factor on the 1st April, nothing to be get disappointed on the 3rd April, nothing to be get disappointed on the first, that by looking into the price actions of the 3rd April, you are still not in the danger zone. So once, as long as this median value is respected,
So here, what I was telling you, as long as your VIX is maintaining below the median value, the rally is going to continue. As long as your VIX is above your median value, the correction is going to continue. I was demonstrating different months. So for the month of January, on the 1st February itself, you come to know that yes, it is above my median value. So it is a corrective phase has continued, and the moment it has fallen below your median value, the rally has started, and the moment also the same way also towards the end also it has moved above your median value. So this also given you a chance that to know that yes, you are into a corrective phase. The most critical month of our analysis was the month of April, when price has fallen. March 31st to 1st April, there is a 340 points of fall happened, but your median value was respected and the VIX was below its median value. Very next day also there is a again further correction of 200 point, but median value was not violated. So this is also another proof that your median value is being respected and the downtrend is not permanent. You are going to get a reversal, and the same thing happened. You got a reversal, and once you got a reversal, and that has maintained for a long period of time till 9,200, 300 also it has gone. So this I was talking, and same way I was telling January to July, the median value is 28.88, and today's also value is 24.54. So I was telling, as long as your VIX is maintained below this 28.88, there is no need to worry about the rally. The rally is going to continue. So the moment It is, we have taken for entire 7 months period. So the moment it is crossing above 28.88, that time we have the sufficient reasons to worry for the uptrend. So this is what I was talking. Then coming to the use of the geometric mean and harmonic mean. These two things are telling that you can use it for the weekly data, you can use it for the monthly data, you can also use it for the long term data, 3 months data, 6 months data, for entire calendar years data. So you can use it for any period of your choice, so there is no restrictions in that. Now coming to the other part of ours, so we are using the VIX as a data. So for that reason only we are using the discrete data model. Now coming to other aspect of that. So there are three different ways you can take the average. One is arithmetic mean or arithmetic average, geometric mean or geometric average, and harmonic mean or harmonic average. This geometric mean and harmonic mean mostly used for your physical devices, means those who are the statistics students, they will be knowing it very well. So geometric mean, you just calculate that if you have a square, then how, if you convert that square to a cube, then how, what will be the side of every cube, each cube will be. So this kind of things it is used, and many practical instrument is your camera zoom also it is being utilized. In stock market analysis, when we talk about the stock market analysis, this geometric mean and harmonic mean is never used in any of our average concepts. Whenever we say 10 period moving average, 15 period moving average, 7 period moving average, we take the closing price or any one constant price and we can use it, but we never use these things in an extensive way of geometric and harmonic. So then why I have added here the geometric mean and harmonic mean? Because here the data what we are dealing with, it is not the price data, it is the volatility movement on that day. So what is the classical definition of volatility? It is the fear factor on that day. Volatility is nothing but the fear factor on that day. So since this is related to a factor which is beyond price, and rather this is a data which is associated with your behavior, traders behavior. So I thought instead of arithmetic mean, we can take the geometric and harmonic mean. So this geometric mean, harmonic mean and median will be different, and there is no doubt that maybe this is your, sometimes median will be more than your geometric mean, sometimes median will be lesser than your geometric mean. So there is that, more or less let them maintain their own way. But here the broad aspect of our study is slightly different. So if you just look into these three parameters, harmonic mean, geometric mean and median. Median gives you a long-term view on the trend. Geometric mean gives you a medium-term view on this, and harmonic mean gives you a short-term view on this. Irrespective of their value points, maybe harmonic mean will be bigger than the median. So here, if I just see in terms of the harmonic mean, in fact, it has told me the moment. So here my analysis comes. Today is 24.54. Today's 24.54. 24.54 is the value of my VIX. So based on this past 7 months data, January to July, it says that harmonic mean has given me a signal that the trend change is going to happen. It is above 24.17. Short term, which is a 3 to 5 days or maximum 10 days, there is going to be a consolidation, there is going to be a correction in the coming 10 days period. That inference I have got from the harmonic. So when it comes to the geometric mean, so here the trend is for very short term, maximum for 10 days period, maximum 10 days period. This harmonic mean you can paste that data points, is that formula is also like that. So harmonic, though it is being taken from the same data points, but harmonic mean gives you a short term view on the trend change rate, and geometric mean gives you a medium term view, which is 10 days to 30 days period. 10 days to 30 days, more than 10 days, less than 30 days period gives you the geometric mean. So when it goes beyond 30 days, that view you can get it from the median. So median says that in the coming 1 month period, the moment the VIX will cross 28.99, if I am going to hold a position for more than 1 month period, I am planning for 1 month period and to build up any position, then I will have more trust on the median value than the geometric and harmonic. When I am going to form a position for short term period, which is 7 to 10 days maximum, I will have my view on the harmonic mean. And when my views are more than 10 days and less than 30 days, I can just consider the geometric mean, not the harmonic, not the median. So based on my trade objective, I'll be taking these values. So you must say that why this difference is coming in the geometric and harmonic mean, though the same data points are being utilized, because of their formulas, implementations, and the usability of the formula. So if you can just little Google on that, what is the use of harmonic mean and geometric mean, what is the difference between harmonic and geometric mean and arithmetic mean. So you will get a lot of information, theoretical informations about that. So all in all, as long as you maintain the harmonic mean maintains that 24.17 below your VIX is there, so you will say that rally is going to continue for 7 to 10 days period. Moment it is moving above 24.17, you can say that yes, this is the trend is going to change. So you must say me here. So there is a 17th July, it has come to 24.2. It is above harmonic mean. Here too also 24.7. This is also above harmonic mean. Here too also 24.4, 24.9, 24.6, and today also 24.5, 24.56. So all these days I have seen that the price is open from 10,900 to 11,200 it has come. 5 days are gone. All the days it is above the harmonic mean. Then I am telling that it is a corrective cycle. It is a corrective cycle. Why there is a deviation? Can anyone will tell me? Yes, I have. So I have the data points here for the January to July. So here I am taking the data points from January to July. That is first. It is a wrong. I have to take for the month of June. Then only month of June to estimate for the July. So month of June it was 30.08. So here the data what you are seeing here, you must say that this is 24.17, but it is going to moving. So here my larger data point is not for 1 month. Data point is for the entire 7 months here. 7 months here. So this short-term actions what you are seeing, it is a part of that 7 months. So which is going to start my 7 months starting from 23rd July onwards. So this data points is not to be used for the short term. So for this month of July, I must consider month of June. So why I told you this thing, the data set what you are using, for that reason only I have written it here. Identify the continuity of rally and correction based on the median value on different time period. So here your time period is 1 month you have taken for June, and you can estimate for the July. So June harmonic mean is suggesting that 30.08. Below 30.08, as long as you maintain, your short-term trend is positive. Short-term trend is positive. The moment you go 30.08 above, your short-term trend will be negative. So this is what it says for the June month's data reference you have taken. June month's data should be applicable for the July. It is not the entire January to July month's data should be taken and implicated for the month of July. When you have taken the entire set of data, then your counting should start from the 24th July onwards by same number of days. So this is the one part you have to take optimum care. So you need to take the proper data points which will be applicable for that month. So if you just have a little bit of difference in your data points, then you will get a wrong result. So you understood. Whenever we use this particular concept, we need to take the proper data points for that. So here, those proper data points will give me for the harmonic mean, and the same time frame it should be implicated. So here we are taking for, as I said to you, in the monthly, though I have conveyed it wrongly maybe. So 7 to 10 days period harmonic. So greater than 10, less than 30 days period for geometric mean, variance is for greater than 30 days period. It can have this kind of views. So here monthly data points if we are taking, so this rule will be highly applicable if you are taking 6 months data, 1 year's data, or 3 years data. Then your harmonic mean, geometric mean, and medians. So you just take in terms of 1/3, 1/3, 1/3. So that will be 1/3, 2/3, and the complete. So if you are taking 6 months, so 1/3 of this thing 2 months, 2/3 of this 6 is the divided by 3 is 2, 2 into 2, 4 months. So here 2 months, 2 months, 4 months, and the entire 6 months. So this process you can able to take the VIX guidance. So it is a Gann technique. So though many Gann techniques are there, today also there was a trend change date. 25th was the trend change date as per our calculations. This video also being released few days back. So this month I have not given you any follow up of that. So here we have also given this particular video. So trend change date. So here what are the trend change date for the Nifty on the month of July 2020. So this particular video. Today was a trend change date because whenever the trend change falls in a holiday, so previous working day will be a trend change impact will be there. So that you have experienced. So here these methods are not mine. This is as per the Gann's method. So this we have just translated and make it usable. So now coming to the other part of my discussion, how we can use the Gann's time analysis to identify a rally or a correction. Whenever I say a rally or correction, any price action, same price action continues more than 5 days period, then it classified to be a rally or a correction. If the uptrend continues more than 5 days period, then it classified to be a rally. If the downtrend continues for more than 5 days period, it considered to be a correction. So this is only a classical definition. But when you look into the VIX terms, you will get a broad definition of a rally and correction. So here comes to the Gann's one of the fantastic method. So why this? What is the Gann study and how it is different from other studies? Gann study says that demand and supply situation is a vibration of the past situation. This is one of the Gann study. Most of you are asking me, Gann's vibration is considered in this course or not? Gann's law of vibration. So many of you, those who have taken the Gann's course also, many of you have asked me, does the Gann's law of vibration is considered or covered in your course or not? So here, always I used to say that Gann's all studies are related to the vibration only. So Gann study says that demand and supply situation is the vibration of your past situation. Past situation, whatever the things happened. So based on that, we are finding out the squaring of the events. So all those things we are finding out degrees, we are finding out establishing relationship. All things are just like that. What was the vibration that time? If the similar vibration continues, then it will also have the similar. So now Gann studies converts the price and time data to a single unit called degree, establish the relationship between them and forecast the future price of time. This is what is happening in the Gann study. So I have just given in a 2 lines conclusion of the Gann study. What is Gann study? How it is different from other studies? Because it takes the vibration of the past. It doesn't take the past data, past price. It doesn't take. It takes the past what situation has created that past event that it takes and it works on that. Second part we are seeing here, price and time data is converted to a degree and establishing the relation. So here, rally or correction will continue or not, that depend upon one of your Gann's time cycle study. So here many of you will be knowing, those who have studied the Gann subject, they will be saying that he has told about a great cycle, he has told about a super cycle, he has told about a time cycle. So super cycle, great cycle, many complex terms you are using, but when it comes to the applicability of those terms, if I ask what is the super cycle, so many of you will give a theoretical answer which will be much ambiguous, which doesn't have any relevance, because all Gann studies is having these terms full of these 3 words. It is a super cycle, it is a great cycle, it is a minor cycle. So the term cycle occurs everywhere. So to come to this conclusion of this Gann study, the simple Gann study, what it says, if trend change happens in equal time cycle or on anniversary date, then use the 360-degree offset to know whether the change in trend is a simple correction or a complete trend change. This is a quote I am taking from the Gann's original literature. Many of you will not understand these terms also. If you read that part also, it's a big document. If you just go on reading this part also, very few people can able to understand this term. This is the exact wordings and same thing has been written in many different classical ways. That classical wordings I have taken out from this. If trend change happens in equal time cycle or on an anniversary date, then use the 360-degree offset to know whether the trend change is a simple correction or a complete trend change. How many of you have got it? When you go with the Gann study, you will come across with this similar kind of logics everywhere. So here, my point is, we'll just learn these concepts. Equal time cycle, what it says about equal time cycle. So I'll just go back to this same data. I have put a Nifty data here. Very simple thing. It's a very simple technique. 14th January, there was a high closing on Nifty, and you have made a low of 23rd March. Then after price has moved up. Neither this high has come till now, nor this low has again repeated sometimes in the post 23rd March. So between this 14th March to 23rd of March, this is known as 49 trading days. 49 trading days. So coming every 49 trading days, there is an anniversary date. 49, every 49 trading days is an anniversary date. So 49 trading days. So I will start counting. So this 23rd March is gone. So 49 trading days. I'll be calculating the 49 trading days from there. So this 49 trading days is falling here on 8th June. So 8th June, this is the 49th trading days. It is the anniversary date. So from here, the corrections have started. You can just see that after touching this 11,167, which was the highest post that March. So this value has never come before that. This 7,610, 23rd March, post 24th March for 49 trading days. Exactly on 49 trading days, you are making 10,167. This 10,167 above price has never come before that. And exactly here, there is a corrective cycle. You are forming a corrective cycle, forming a correction. Now, the sentence says that if trend change happen in equal time cycle or on anniversary date, that is the anniversary date, then use the 360-degree offset to know whether the trend change is a simple correction or a corrective change or a complete trend change. So for that 360-degree factor he has told us to utilize, and that 360-degree factor if I utilize here, I am taking the square root of this thing, subtracting 360-degree factor, squaring it off, and again adding, squaring it off. It is telling me if the price fall below 9768, then it is a complete correction. It will fall down to 9376. If it doesn't happen, then it can come to 10,574. This is what it says. Use the 360-degree offset. This 9768 and 10,574 are the 360-degree offsets of the Nifty, and you can see that exactly after that there was a corrective cycle happened, but it has got arrested at 9813. Now it has not fallen below 9768. This is the closing basis. This is the closing basis. So this has happened on 15th June. So this happened on 15th June. I am just highlighting this. So just we will go to the 15th June price. 15th June price of the Nifty. What happened on that day? So here 9726. You can see here 9726, 9813. So just have a look on these prices. 9544, 9972. These are the lows I am telling. These 2 days. And then after also there is a day happened here. So I am just going here. So here once it has crossed below 9768, you have seen that 9544. In fact 9726 also it has attempted but could not able to hold it. Again moved beyond that. Any day if it would have closed below 9768, you could have seen that 9376, the second cycle of that. If it has not happened, then your 10,574 is also achieved. So now from here 8th June, the same sequence, if I can just continue. Now 34 trading days are over. So we required how many? 49. 34 is gone. So 34 is gone. So we are left with 15 plus 1, 16 days. Almost 15 days. 33 is gone. 33 are gone. Sorry, 34, not this, 33 days. Same day will not be, that particular day will not be counted. So 33 till 23rd, today's date if you take 34. So 33 trading days till 23rd July. So 49 trading days you can get in the 4th of August, you will get a trend. On the 14th of August, you will get a trend, which is the 49 trading days or an anniversary date it has maintained. You have to use the same logic when that trend change date happens. You have to use the 360-degree factor to identify this thing, to know the future trend. So then you have other values like 69 calendar days are between that. So there are 69 calendar days. So 69 calendar days are there. So in between this of high formation and low formation, there is 69 calendar days, 49 trading days, 69 calendar days. So if I take the calendar days into account, so 1st June is coming one anniversary day, 9th August and 17th October. So 9th August and 17th October also you are going to get a trend. So this is a simple Gann technique, though it has written in a very complex way, but it is the simple Gann technique which you can utilize. So which you can utilize for the trend forecast or the trend change date estimations. And as far as this targets are concerned, so target calculations are concerned, on 8th June this is the price. So I have taken the square root of this thing. 360 degree factor is nothing but 360 divided by 180 square root, and entire result should be squared or double multiplied. So this is the low and this is how the high is calculated. If the closing happened below 9768, then 9376 also is a achievable target, and as long as it maintains above that, the rally is going to continue till 10,574. So rally is going to continue till 10,574. So this is what this has suggested based on the enter to a market and you exited too early, or many of you what used to do when that corrective cycle used to come, you will not understand, you will hold on to that position, there will be a big damage in your positions. So there will be a big damage on the positions. So here, to simplify that factors, I have just brought you this median value, geometric and harmonic mean concepts. Monthly, previous month's data you take, for the June month's data you take. So you will have informations for the month of July. As long as your VIX is below 30.08, nothing to worry, you are into a uptrend cycle. The moment it will cross 30, you will be at a downtrend cycle. Same way, and timing study also is very important. So many other timing studies there. We are monthly trend reversal date, we are finding out many things are there. Monthly trend reversal date you are experiencing every month, we are releasing that, Nifty and Bank Nifty. So though we claim that it is only 65% accuracy, but most of you are getting more than 65% accuracy. So timing study. So here you have seen that there is a anniversary day concept. There is a high has formed, one low has formed between that 49 trading days. So every 49 trading days there is a trend change is expected. So that you have found out that 8th June there is a trend change date. So it has worked perfectly. It has not only worked perfectly, it has till 17th June it has continued perfectly. And to get back to that level, 19th June only you have come back to that level. And the same process, if I can count 49 trading days from here, 49 trading days from here, then next trend change date is 14th August. Then 14th August, beyond 49 days also you can count. So same way you can take for the 69 calendar days. So between these 49 trading days, 69 calendar days. So based on the 69 calendar days, you have 9th August, 1st June, 9th August and 17th October. These are the 3 days are there for your trend. So these are the great part of your studies which can help you to identify a trend change date, and then after you have to use the 360-degree factor to know whether the trend change is going to continue or the trend change is going to be a short-term correction. If the trend change could have happened below, or any one single day if you would have closed below 9768, then I could have concluded that it is going to fall to 9370. Since none of these days it has held below 9768, 10,574 was achievable, and harmonic mean also was supporting my view, and median also was supporting that view. So though there is a correction, but still you can buy into it completely. Those who want to learn the complete Gann course, we have a fantastic Gann course here, WD Gann course. 34 intraday trading technique, it comes with an 2500. But those who have taken this course also, my request is try to don't see those videos just like a movie. Just see that videos as an academic session. Like one video you see, do some workings, do some pen and paper you take and do all calculations, then move to the next. So by this process only you can able to learn. So you are seeing these facts, so you are getting thrilled that yes, it has happened 20. So here 49 days it has happened, so trend change exactly happened. This is the simple method. Many complex timing analysis methods also there, slightly complex, that requires calculation. Like the monthly trend change date. Today also trend change date was there, it has worked. So those calculations we have not kept in secret. We have opened it up. It is your choice to learn it. So it is not that without that software you can't able to do that calculation. You can do that calculation. That formulas we have brought it to open domain. So those formulas you can able to imply it. So here also I have told you what is the difference between the original Gann course, the original Gann writings and our courses. This one sentence itself, if it is too difficult to understand, you just imagine that any of those books, whatever the written by W.D. Gann, if you read through it, nothing you can able to understand. Even though if you understand, you can't able to apply. So that is very important. Why I am studying this? Because I want to apply it in the market and see what is the result. So that is why I am studying it. If these methods are theoretical, it doesn't prove itself, then there is no point in studying it. So 49 days sequence, there is a trend change date, it is being set. So how long it will continue? Can it will continue for the 5 years period? So none of you has asked me this question. Though I am asking this question, 49 days it is going to continue. We have seen a proof here. We may see further few proofs. Can it continue for 5 years, 10 years, 20 years? How long it will continue? So this is a simple method. So what happens? This is how we study. So okay, Ranjan told it has worked for August. Then after it has worked in the November, 1 year it worked. Then after it did not work. So that conclusion we have derived. Because those who will not study, what they will see, they will go for the conclusions very quickly. So what happens here? This particular concepts whenever it is formed, so we brought into the 5 cycles. So maybe 1 repetition it has perfectly worked, 2 repetition also perfectly it will work, 3rd repetition also it will perfectly work, 4th it may not work, 5th it will may not work. So 5 is the maximum cycle. So every demand and situations has a 5 different cycles. Post 5th cycle it won't work. Then after you need to hunt for a new high, new low, and a different period and different mappings you have. So once one part it dishonor, if this stage also, if in August it dishonor did not work, then don't take this 49. So you trail for this, what that is called your squaring. So which time frame, which high low time frame it has squared now. So that is why the Gann study is very complex and little bit requires a tricky study. So if this 49 sequence did not work on the month of August, don't get disappointed that Gann did not work. It is nothing to do with the Gann's things. It is now squaring with a different time frame. So that different time frame we need to find out. Once we find out that, this is going to form for the next 5 days period, next 2 to 3 cycles it will work. So it is a dynamic study. Don't think that it is a static study and it is forever. It is going to be. There is a small to say that there is a small story, and many times I have told in my old webinars. One person went to buy some medicines from a pharmacy. Carefully listen to this. This story will clear off all your assumptions on the studies, because very quickly we conclude that no, this method works, this method doesn't work, without introspecting anything like that. So those who are studying perfectly, for them it is not an issue. One person went to buy some medicines from a pharmacy, and he went and bought some medicines, and pharmacy said that no, I do not have change. Tomorrow morning you come and collect your change. he has given 100 rupees, some change he has to collect. He said that tomorrow morning you can come and collect the changes. The man comes out and say that how I will mark this place that this particular pharmacy I have to come and collect. He saw that one bull was sleeping in front of that store. One bull was sleeping in front of that store. The man said that, okay, this bull is the mark. So tomorrow I'll see and I'll find out this place. So next day morning he come and he found out that the bull has moved from this place and the bull is no more there. Bull is sleeping in front of a grocery shop. So this man went and said that yesterday night I came and collect the medicines, you give me the medicine. He said that, are you mad? I am selling groceries. How can I give you these changes? I have never sold you any medicines. So this is the difference between a study and an intelligence. So here what happens, monthly levels whenever we give, or this Gann study whenever you have to study, you need to put your intelligence also here. So here squaring is a concept being utilized. So which time frame is squaring? That is very important. So 5 cycles it will maximum give us the success. The moment 2 or 3 cycles are over, instead of waiting for a failure, see for a squaring phenomena what is happening. Have a look on that. Monthly high and low has happened, how many days, whether that same period it is high and low is going to be mapped or squaring is happening. Based on that only you can take it. So if you do that, then only you can get a success in the Gann study, and especially for the forecasting. And rest depend upon your money management and other factors. So here with this, I'll be ending today's session. It's a quite long session, and so and I thank you all for joining this program, and tomorrow we'll have the same program in Hindi. All of you should join. If you understand Hindi, you can join. Any query you can post me on 9941110570505705. This is the WhatsApp number. Any query you can post me here. If you are interested in getting any of our courses or softwares, you can visit our website smartfinancing.com. In the product link, you will get all our products. Here we maintain a complete transparency on the subjects. My books or my courses doesn't have any non-relevant talks. If you count the number of pages, our book pages are very less. But if you look into the part of skill or knowledge in that, it is a great part of the things you will find out in that. So though it is a book of 245 pages on the Gann, but seriously if you learn, it will take near to a year to complete all the concepts. So this is what the Smart Finance stands for. Many of you are experiencing different subjects of the Smart Finance. So this is one of my new innovations on the VIX, and many more is yet to come. So this is still in the observation stage, and many more conclusions we will be deriving from the VIX. So keep in touch and join all.